You want to keep more cash when you're selling your house? It's tax time, so it feels like the perfect time to start going through the IRS capital gains tax break, right? You bought your house, you're living in it for a few years. Hey, you decide to move, you want to sell, you want to step up. Well, there's a gain on that. Do you pay taxes on that gain? And it all depends. One, every person has a capital gains exclusion of up to $250,000. So if you're married, it's combined, it could be $500,000. So basically, if you bought your house for $500,000 and you sell it for $1 million as a couple, there is no capital gains because it's within the exclusion. A couple of rules to it. It has to be your primary residence, can't be an investment property, and you had to have lived there for the last 2 of the 5 years. So like if you kept the house, moved somewhere else, but that was still your primary residence for the last 2 of 5 years, you're good there. And you can't, of course, use it every 2 years. Like you need another 2 years before you can use it again. But anything under that exclusion is tax-free. Anything above that gets taxed at capital gains rate. So it's always best to start with the end in mind. And things that people don't realize is any renovations you do to your house increases the basis, which is almost like increases your purchase price. So if you bought the house for $500,000, but you did a new roof, you put in a new boiler, you renovated the kitchen, whatever. If you keep track of it, that now gets added to the basis of your home. So if you bought it for $500,000 and you sell it for 1.5, instead of having a $500,000 capital gains, if you had spent $350,000, $450,000 into putting into your house, you're going to offset that capital gains. That becomes your new purchase price to make it easy. So keeping track of it is huge. Have to start now. So if you're a first-time buyer, just closed this year, best time to start keeping track. If you did it within the past couple of years, same thing. Go back, update the sheet. You know you've done stuff. If you bought a house on Long Island, you definitely have done stuff. And it will keep track of your current basis. So if something comes up and you weren't planning to sell, but now you are selling, you have those numbers on hand. And it doesn't have to be super detailed, just what you did. If you keep receipts, email tracking, whatever you can do. But the easiest way to do it is with the sheet we just created. So you can kind of keep that handy, update it every year, update it as you go. So you'll have a current basis in your house. So you know where you are. If you sell it, do you have to worry about capital gains? It will save you thousands, if not hundreds of thousands of dollars down the road by doing this now. So it's free. It doesn't cost you anything to just keep track of what you're doing anyway. But this one thing will save you tons of money. So earlier is better. Start it. I'll have the sheet available so you can take a look, keep it up, keep it updated, and then from there, down the road, you happen to sell, you'll know what your capital gains is. Everyone always thinks they have to pay on the gains of the house, and they don't even realize there is an exemption or exclusion, and then they don't know the limits of it or the rules required to it. So start there, start with the form, and I said, you will be better off when you sell. When you go back and look at that sheet and they say, oh, well, you got capital gains, you're like, no, I don't. Look at this, 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 and this. So have a good one.